Okay, so with SAF, it's quite an important area for the exam. You'll quite often get asked to evaluate some sort of strategy or kind of weigh up whether a strategy is going to work for a business or not. It's a popular A-section question, like I say, and it's also one that people often don't do as well at. So hopefully what you should have done by now is actually had a go at RB, the question where they're looking at buying the Villa de Erst. So you should have your answer in front of you. And I thought what we'd do is we'd just spend a few minutes in a little recording going through the answer together and showing you how you should tackle it. Now, like I say, this is an SAF question. The first thing that I wanted to highlight to you is how you actually know that it is an SAF question. Well, the key here is looking at the word, okay, and the verb of this particular requirement. You were asked to evaluate the proposed acquisition of the Villa Erst by RB. Okay, look out for that word. If you are asked to evaluate a strategy, then what you're really starting to look for is the idea of SAF. Now, remember what we said before, if you didn't use SAF, you're not necessarily going to get penalised in the exam. So you might well find that you just end up using pros and cons. So what is good about the proposed acquisition and what's bad about the proposed acquisition, and then you come to some sort of overall conclusion about whether they should proceed with it or not. That's actually fine, you can do that. Do tend to find that this kind of people don't get the depth on the answer that they would do if they used SAF. So if it was me in the exam, I would try and use SAF if you can, but like I say, if you don't want to, or you have issues on the day and can't really remember how to do it or something like that, well fine, you can just use pros and cons. So like I say, you should have your answer to hand, so have a look at what you actually put down using SAF, hopefully, for the Villa Erst, and then if you've got that with you, then we'll start having a look through the possible things that you could have said. Now first up, you don't have to do these in any particular order, but I'm going to use suitability to begin with. Now remember, layout is important for this exam. While you don't get marks for it specifically, it goes towards the kind of the look of your answer, if you like, and making sure that it's professional, and also making sure that your thoughts are organised well, and that can definitely help you gain extra marks. Now for suitability, you are literally looking at whether the strategy that you're suggesting, so the acquisition of RB, sorry, the acquisition of the Villa Erst, is actually suitable for RB. Does it fit what you know about RB from the scenario? So before you actually start answering the question, what you need to think about is what RB is actually trying to accomplish as an organisation. What are its targets? What are its major issues and concerns that it's going to have to deal with? So you wouldn't necessarily, I'm not saying you write this in or anything like that, this is just a kind of an extra, just have a think about one, which is why I put it in red. Try and think before you answer about their targets and issues. So, for example, you should have spotted the fact that RB is trying to move to a more upmarket position because that's the way that the industry seems to be going. You'll notice that they do have some issues with that at the moment. Their reputation and kind of their sales and profits because of that have taken a bit of a tumble over the last year or so because they've not been able to provide a consistent quality customer experience. It also mentions one of the other issues they're facing at the moment is increasing competition in the market. So have a look at the company's issues, targets, things like that. And then what we're going to do really with suitability is see whether the proposed acquisition of the Villa Erst is actually going to help this company kind of deal with those issues, move closer to its goals, or deal with the problems that it might be facing. So, for example, one of the things that you could have said here is that if we're trying to move more at market, well, the acquisition of the Villa Erst could actually help us with that. The proposed acquisition can help RB to move closer to its goal of creating a more upmarket image for itself because you're going to be associating itself with a very prestigious, well-known Italian hotel. As well as the kind of brand association that you might have with owning this new hotel, it could also help you move more at market because it would be possible that RB could analyse the operations of the Villa Erst and learn how to improve the quality of its offerings in other hotels. And that could potentially help it deal with these variable customer experiences that it's had in the past. So if we could learn why the Villa Erst is perhaps doing so well, we could then replicate that in our other hotels across our chain. So that could really help us with that variable customer experience, as well as helping us move more at market. So it does kind of tick a couple of boxes for us here. The other thing that we're facing, of course, here is the increased competition in the market. Is this going to help us? Well, the answer is yes, because technically we are actually buying a rival hotel. It might only be one of them, so it maybe isn't going to eliminate competition completely, but it does eliminate a rival. So it helps us to at least slightly reduce the growing competition that we face in the global hotel market. Now you'll notice again that each of those points that I put down here is made relatively briefly. I've done really just a couple of sentences or a short paragraph, I suppose, for each one of them. And that's really all you need to be able to do here. But you do have to explain yourself. So you can't just say, yes, it's suitable. You have to say, well, look, this is the target, so we want to move more at market, for example, and the acquisition or this strategy is going to help us achieve that because of this. So make sure you are explaining why the points are actually helping you either achieve your goals or deal with your problems and targets. And hopefully you'll see that we've tried to do that in these points. The other thing that I'd stress that I think, again, we've mentioned kind of when we've looked at questions together before, is make sure that you do actually try and use names from the scenario in your points, because it really helps make sure that you are applying them. So in this case, you'll notice everything has mentioned either the Villa or RB as we've gone through. The other thing that you need to do at the end of each section is conclude. So you might find that there are things pointing in different directions. In this case, I would say actually everything that we pointed to here would suggest the acquisition could well be suitable. Okay, so I just want a brief conclusion in saying, it seems to match our targets and the issues that we're facing, and therefore I would consider it suitable. Now, your answer doesn't need to have come to that conclusion. You might have argued it differently and suggested this actually isn't suitable. That's fine as long as you have been able to justify yourself adequately and explain to me why you didn't feel it was suitable. So as long as your conclusion for this section matches into your analysis, again, you're going to get credit for it. So that's our first stage, suitability. Our second stage we're going to look at is acceptability. Now remember, acceptability focuses in very much on kind of our key stakeholders and thinking to yourself, will my stakeholders be happy with this proposal or not? So again, before you actually start writing your answer, you need to have thought about, from the scenario, who you can identify that RB's stakeholders are likely to be. Now, there's not a huge amount of information in the scenario. The main groups that I might have picked out would be customers and shareholders, and they're the ones that we're going to talk about here. You might have talked about staff as well. That would have been an option, although I've not mentioned it here specifically. So for customers, they want presumably better experiences and better facilities being offered for their hotel trips. So obviously we need to think about whether what we're doing is going to be acceptable to them. And one of the other groups that is specifically mentioned in the scenario, who are always going to be important, are going to be our shareholders. And they want more money and returns. Okay, so I've got my heading here for acceptability. So I need to think about each of my stakeholders kind of one at a time and decide whether I actually think they're going to be happy with this proposal or not. Now, RB's existing customers, I think if we look at maybe breaking customers down into two groups, RB's existing customers, I think, are probably going to be fairly supportive of the proposal. It does give them an additional hotel to visit within the chain, so there might be some advantages there. And also, again, it goes towards the perceived quality of the chain as a whole. So if the Villa Erst is a fantastic reputation place and we're actually linking that into RB, then it might make the whole of RB feel like it's a better quality company. In particular, like we said before, there's also the chance that RB is going to learn from the Villa Erst and be able to transform the rest of its hotels into a higher quality offering as well. And if they do that, that would certainly be something that the existing customers would find positive. It's difficult to say how the Villa Erst's customers will react to this. I would suspect as long as RB continue running the Villa Erst as a high-class hotel and don't make any significant changes that will upset customers, I think the Villa Erst's customers probably won't see a huge difference after the takeover and would therefore find the acquisition acceptable. Obviously, if RB change the way it's run and kind of run it into the ground and take away the quality that they have at the moment, then that would potentially make it less acceptable. But we don't really know how the Villa is going to be run from the scenario. One of the other kind of main groups, and I think the one that we can probably talk about the easiest anyway, is the shareholders. RB's existing shareholders, I think, are going to find the acquisition acceptable as long as it improves the financial position of RB. We know for a fact that they are very keen on seeing us increase the profits of the business and also the dividends that they're going to achieve. Now, acquiring a profitable organisation like the Villa Erst, and one also that kind of generates cash flows all the way around the year, which isn't that common for a lot of hotels, means that it is likely to improve RB's profits and cash flow, allowing higher dividends in the future. So if that's the case, shareholders would be very likely to support it. However, you can kind of talk around this issue. It's not necessarily as clear-cut as you might think. It's worth noting acceptability will depend on whether the price paid for the villa is deemed to be fair. We don't know. We'd need to do some sort of proper formal business valuation to come to that conclusion. We can only assume that the $50 million price tag is a fair one. But it's also probably just worth noting that if we do end up spending $50 million buying this new villa, that is potentially going to put a significant strain on our cash flows in the short term. Whether we actually are able to buy it completely out of our cash balance, or even whether we have to take out debt and then make payments for interest. Both of those things, at least in the short term, could lead to lower dividends for shareholders before they become higher in later years. So it's just worth mentioning the fact that, you know, this could be a longer term increase to shareholders, and we would need to be very careful about how we phrase that to them. So if they want really quick short term increases in their profits and dividends, they may still not find this acceptable. Now again, it depends how you've argued these things, and I think there is possibility to argue that, you know, customers might not like it or shareholders might be too nervous about it. It's kind of up to you. As long as you're convincing, I don't really mind. But I would say with this one, the proposed acquisition does seem to be broadly acceptable, but obviously we would need more detailed financial analysis. Okay, don't be afraid to ask for a bit more information. There's nothing wrong with that. This is quite a short scenario, but you do still need to try and come to a conclusion. So conclude, even if you then say, but I still need this extra information. The last heading we've got is feasibility. With this one, you're just looking at whether it's physically possible and practical for you to go ahead with a particular strategy. So from this point of view, what we're likely to be looking for is whether as an organisation we've actually got the resources, the skills and the abilities to be able to kind of put this strategy in place. So can we actually buy and run the Villa Erst reasonably? Is that something we can actually physically do? Now, from a resources point of view, the main thing that you are going to need for this acquisition is cash. And we've touched on this already. We know that RB does have a significant amount of cash in reserve. It doesn't tell us how much cash is available, but the fact that it says it's significant means that we've at least got a reasonable amount we could use to hopefully make this purchase of the Villa Erst happen. It's worth noting, though, that while we do have quite significant cash balances, the acquisition of the Villa Erst isn't the only thing that we're planning on doing. It does mention the fact we are planning very significant investment in our existing hotels. That's going to use an awful lot of cash and might mean there actually isn't enough available to do that and purchase the Villa Erst as well. However, if the cash isn't sufficient, obviously RB is in a very good position to raise the extra money that it would need through debt. It mentions the fact specifically in the scenario that the company has very low levels of gearing because they always have done. So it could presumably easily go out and get extra debt, particularly because it's got a chain of hotels that it could secure that on. It's again probably just worth noting that shareholders might not entirely like that. Maybe shareholders particularly like the idea of having a company that has low levels of gearing. So we don't know exactly what their reaction is going to be, but generally speaking, I think it seems to be feasible. We could well get to the point where we can raise or use enough money to buy the villa. From a skills point of view, RB is currently in the luxury end of the hotel market. So if we actually go and buy another luxury hotel, you'd assume that we actually have the management skills within our business to run it successfully post-acquisition. So I think our management skills are probably there. I mean, one thing you could mention here is if the management have to run a new hotel and also try and refit all of the existing hotels, that could potentially strain management time quite significantly. So whether they've got the actual capability of doing it that way, I think you could maybe argue. But as long as they can manage the two projects, then that could be possible. You could, however, also mention here from a skills or experience point of view, of course, the RB rather, is based solely in Asia. So all of our hotels are currently based in Asia and Asian markets, and we've got no experience of operating in Europe or the Italian market specifically. So buying our first Italian hotel, there could be legal, market, regulatory issues that we are unfamiliar with. And maybe you might find that the kind of local market needs are different as well. So while this is an international market, it's part of it that we don't really have an awful lot of experience of. So that could be a cause for concern. Now again, I know I've argued things in different directions here, but you are going to have to make an overall call here on whether you think it's feasible or not. I reckon, given the fact that we've got access to cash and that we do run a luxury hotel chain already, I would say it appears to be broadly feasible. Now, while you've done your S, your A and your F, you actually haven't finished. You haven't answered the question yet. What you need to do to finish things off is have another heading at the end as an overall conclusion. Okay? For your conclusion, it doesn't need to be very long. In this case, I've decided in my version of the answer that the proposed acquisition is feasible, acceptable and suitable, and therefore RB should proceed with the acquisition. Now obviously, as we've said before, if it wasn't all three, then you have to reject it. So if you've said that it isn't feasible or acceptable or suitable, if you've even said no to one of those things, then you would have to tell them that they should reject the project and that they shouldn't acquire the villa. If you want to really show off and be posh in the exam, then what you would also perhaps be able to do is suggest very briefly, like a sentence, you could very briefly suggest an alternative. So if we'd said that they shouldn't go ahead with the acquisition of the villa, you might, for example, turn around and say, well, okay, what you could do instead is just finish upgrading your existing hotel and then look for acquisition objectives after that, so it doesn't stretch your cash flow and it doesn't stretch your management ability. But that would be entirely up to you. And that's it. Hopefully you found that useful. So we've had a look at how you actually structure your answer and what you could have said in there. Like I say, SAF questions fairly common in the exam, so definitely worth practicing.